Hello, everybody, and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. My name is Jesse Day, and before we get started, standard disclaimer: nothing here is investing advice. Do your own due diligence. And today's guest is a renegade trader and technical analyst with over 30 years of experience and the founder of the Market Sniper. It's Mr. Francis Hunt. Great to have you on the show.
Thanks for having me on, Jesse. Glad to be with you.
I want to get started like I do with all new guests with the Francis Hunt origin story. So, how did you first discover trading and investing, and how did that road lead you to where you are today?
I think inherent laziness. I was really young, and my parents invested some a bequest from a passing of their parents into mutual funds during the 80s. This was during the 80s, and I noticed for a number of years during the 80s they would check the price of their mutual funds in the newspaper. That's how you did things in those days. There was sort of a back page with all the details, and it would go up and how much up. And that was a bit of a bull market. And I subsequently had an aunt who never married, who left small stipends to all her nieces and nephews, and I was lucky enough to be one. And I put my entire net worth, which was essentially that mini bequest, into the stock market. She was in England, and so they sold off her properties after she'd passed. And I got called up into the army for August 1987, and I put my entire job lot of pounds sterling, which was a valuable currency when you're in South Africa, into the essentially the stock market through two mutual funds in August 87, which was just about the perfect month to catch the September-October largest ever day crash in history. And I think it still holds records to today in terms of percentage loss in a single day. And it was the beginning of a bit more systemic programming, and stop losses being triggered by computer, which just sold, and they caused like a cascading effect. So it was absolutely devastating, and it was kind of love at first bite, if you want. Thankfully, I was too busy being chased around, and I did an office corp, and I didn't have too much time to think about any of that in the military, which also had a bit of a mini hot war. So we had to go to the border and fight. At that time, it was the communists versus the capitalists. South Africa was aligned with America and the United Kingdom against what was deemed a communist axis, which was the ANC and the people, the wannabe powers in Southwest Africa. Anyway, too political. That was the start of it all, and it was a disaster, basically. But nonetheless, I noted that you can go to work like my father, who had a sort of 90-kilometer round trip, 45 k's in each direction. They carpooled during the petrol crisis to earn money, or you could watch a big number tick up. And I thought that seems like a much better idea. I want to learn about that, where things tick up in your favor and you just have to make decisions. So the toil versus being well positioned. The well positioned just seemed to sound a lot more. So the greed reflex, the status reflex, all those reflexes were there in a young male, as you can expect, and all the errors were made. And I often characterize myself, rather than a natural trader, as someone who was the most unnatural trader. I was the Eddie the Eagle, which was a character who went to go compete from Britain in the ski jump, who was absolutely garbage, and everybody loved him because he just showed up and was absolutely garbage. It's kind of like running the 110-meter hurdles and being that guy who comes in 3 seconds after everybody and has smacked every hurdle over. So I literally made every trading blunder repeatedly that can be made, and repeated them ad nauseum for an extended time. And by biology, quite a fast metabolism, easily stimulated by things like caffeine and all of that, prone to impulse. I probably have the worst biomarkers for being a successful trader. So it was a bit like choosing to be a fighter in the heavyweight division and actually weighing 40 kgs. You're just going to get beat up a whole bunch. So that's pretty much what led me to develop the HVF method. The only reason I stayed in training, eating losses regularly and doing dumb things, was it felt like this Rubik's Cube that had to be solved. And it was the puzzle of a lifetime for me. And that led to the derivation of what I utilize today, which is the Hunt Volatility Funnel method. and I now teach and share and have community trading groups and take people on the journeys of that learning and how real process can actually save you from yourself. You are your own best weapon and your own worst enemy. And we need to protect ourselves from the darker sides of activities that we tend to have, which is FOMO, impulse, all of these things, and superimpose a template or process. So that's kind of my trading story. Notable trades were, calling the Euro Swiss franc collapse in 2009 before anyone had heard of the Greek crisis. We called for a huge devastation of the euro relative to Swiss franc. It's kind of obvious now. It doesn't feel a big thing, but the euro is a big new currency. It's only been about 9 years old, I think, from 2000. The notes only came into circulation. The single-digit oil crash. I like big macro calls. There's quite a lot of them. We put up a site with case studies, but we also get plenty of stuff wrong. But the key thing about the method is we want really tight stops so that we're quickly wrong, and we want big explosive moves. So we are volatility constriction traders that trade the expansion, and we like big time frames. So big, steady moves. I found that the only time I'm really comfortable in the market is when the market moves strongly and violently away from my entry point in the direction I expect it. Anything else you started to tinker and get jittery. So I decided, what sets that up? And we came to the conclusion, very low volatility. You need to have tight stops. And in most instances, stops work against traders because their stops are too tight for the average trading range, and they have an inverse scalping system that is scalping them losses. So you need money management, but in the way people implement their money management, that is incorrect generally. And there's only very unique places where you can engage the market. For example, I wrote an article that said the best trade is no trade in most instances. The one advantage the retail guy has for building wealth and investing and trading is that you get to choose when you engage. Institutions have to give you a bid and an offer. They're always in. And I'm always shocked by the degree of compulsion. I call it compulsion. You have to be in. It's so destructive to be in the wrong time. It is damaging. So you really want to be selective and have a whole bunch of criteria that are met so that the probabilities of a particular outcome are far more skewed in your favor, and the space/stroke distance from your entry and stop is super tight. So that's kind of a nutshell monologue philosophy for you.
Great. Well, I do want to dive into your trading methodology in a moment, but first I want to touch on something you stated in a recent YouTube video on the Market Sniper channel, and you were stating that inflation isn't over yet. So walk us through that. Why do you think inflation might go higher, and how in control is the Fed of inflation really?
So on the central banks and inflation is policy. They don't tell you that, but inflation is absolute policy. It's how they get to continue spending and grow government expenditure and create a cartel of insiders that get exceedingly wealthy, and how they have a sufficiently large, group of patsies that have to hold the other side of that hypervaluation they experience, and that's the devaluation. So putting you on a greased pole is the sure way to keep you having to climb like a monkey on a greased pole, just to make any form of holding your space in real terms. And then you have to climb extra fast to actually make ground. So inflation is typically policy. They'll usually say, oh, a little inflation is good, but a lot is wrong. And deflation is terrible. You always get told deflation is terrible. Essentially, deflation is a situation where your currency buys more goods. Well, of course, it's terrible for them because debt goes up in value and the purchasing power of the consumer goes up in value. They don't want that. They want to keep adding debt and devaluing it. So if you look at where we are now that we brought up debt, money is borrowed into existence. So you essentially have a situation where there is so much money that has been borrowed into existence. The debt is getting so vast. Just on that point, you had a trade deficit of 89 billion 2 months ago, and the month after that, it was just shy of 300 billion, 280 billion. So, and that's a massive spike in trade deficit. So that means you're spending more money than you get in with other nations. And that's part and parcel of you've got massive interest rate. You've got more imports than exports, first of all. So you're exporting dollars and you're importing products generally as America. But then when you look at the general deficit, you have reduced tax income, you have increased interest rate expenditure, because you've now done these interest rates, and you've got ever escalating amount of debt. So you have to keep paying much higher. You're spending more now on interest rate payments than your military industrial complex and defense, which is a huge pig in the room, I have to add as well, in terms of individuals. And it's a growing one. If you just look at where the mixed stocks are nowadays, they're very close to all-time highs. So you're in this absolute perversity that, in essence, the debt there's so much of it has to be devalued, and rates going up is what devalues it. Because a bond goes down in value as the rates go up. It has an inverse relationship. But if rates go up too far too fast, you get a killed consumer. So what tends to happen is there's two release valves when you're in the America situation. There's the currency, so you borrow money into existence. One is the currency, the other is the debt. So you either let the debt devalue, which was what was happening as the interest rates were allowed to go up, debt was devaluing. But once the interest payments get too much and you're having to reissue more debt at an ever faster rate to get the money to serve the interest, you have to otherwise occasionally pull that interest rate a little bit down. We saw the bonds markets, the 10 years and the 30 years stop going up a little bit. Of course, they paused the month before, my apologies. They've tightened by another 25, I think it was yesterday. So the currency then becomes a release valve and you get the dollar devaluing. So you either devalue the debt as an asset class or you devalue the currency as denominated in. But one thing's for sure, when you have that much of it, it's not rare, it's not scarce, and it's not high value. It needs to go significantly lower. And most people's pensions and other things are based on debt as asset. And that's why you will have inflation, because the debt has to be devalued. And that leads to an interest rate spike and a reset at some point. So to answer you, the first shunt of inflation, they said inflation was down. It was 3% instead of 3.1. Big deal. There's basing effects. You were comparing it with a year on year. So statistics are lies, damn lies, and statistics. You compared it to a high point when you were 9.3% exactly a year ago. That's called basing effects. So what that means is you're 3% higher than a very high point that had super spiked then. Next month, when you're comparing it with a lower month, where it was starting to come back down, 8.7, etc., you're going to battle to keep it at just 3%. So you get these statistical anomalies where you get shunt, pause, shunt, and it's far from over, and the debt is being created at an ever-escalating rate, which means it's devaluing, or it should be allowed to devalue at an ever-escalating rate, but isn't, because the people that control the interest rates are central bankers. You get the perversion of the yen, for example, where they're trying to hold the debt value at 0.5 and they have 300% debt per GDP. What's happened is the yen has been the weakest currency of the majors over the last year. But you get a similar effect for the dollar as well now. So there's a dark cloud on the dollar, and this is a beautifully bullish setup. The good news about that, if you're American, is it's a bullish setup for gold and silver and other anti-fiat categories.
Great. Well, why don't we? I was going to bring this up later, but since you just brought up gold and silver, why don't we talk about that? Because when we were offline, you mentioned to me a key technical level on the gold and silver ratio that you think people should be paying attention to. So maybe you could walk us through that.
100%, yes. I'm going to pull up a chart right now. In fact, I'm going to put a fortnightly chart. So fortnight being 2 weeks for a single candle. So you can understand this is quite a macro chart that I'm bringing up. It's one I've got a habit of bringing up in most instances because I really feel more people should be watching this. And I also say something that I will repeat also for you, for everyone listening, because it might be a lot of first timers encountering me. But March 2020 was a seminal turning event for a number of markets. So March 2020 was the lockdown events around the thing that may not be mentioned, but that was peak bonds. That was highest valuation in debt. You actually had a 0.3 rate. In other places, you had negative rates. debt was never more valuable. Everyone panicked, there was fear, and you ran into your government as being the bastion of last resort and the safest place for your money. And that was why rates went so low. And at the same time, you had a gold versus silver ratio super spike that was the exact opposite of that. You got peak devaluation of silver in terms of gold, which was both a hit on gold, but a far larger hit on silver, which is a much thinner market and easy to bully. And you had about 128 ounces. We've never been that high before. Just to be clear, in a mining context, if you speak to Steve Newmeyer or First Majestic or any of these other people that are involved in digging holes in the ground, they will tell you that generally they pull out about 8 ounces. Between 6 and 8 is the range for every ounce of gold they pull out. In fact, silver is so non-economic. If you don't have enough rich enough vein, most silver is pulled out as a byproduct of digging in the ground for something else. Copper, gold, tin, and other things. So it's just a little bonus added extra to boost the bottom line. Probably works in as an important contributor, but they wouldn't do the mine for the silver. That's how low and disproportionately low the silver prices are. So that 128 was a peak blow-off. Technically, in technical analysis, you get blow-offs. And that was this period. That's how bull markets in anything, that's a chart going up, ends. You get a major blow off, and then you get what we call a slap in the face to the downside. And that brought you right down to a 65 neckline, neckline 65 there, which is a left shoulder. I'm showing you the left shoulder. This is a huge blow off head, and then we're in a right shoulder here. So that's a head and shoulder reversal pattern on the gold silver ratio. And this 65 was peak gold. We got through the 2000 the first time, and silver had the Wall Street bets mini pump. I think it might have touched 30 for a second or two, and that was down here. Since then, they've tried to claw back some degree of control, but they will never get to this high again. And in fact, this is now the last dance. The right shoulder is the last weak attempt at a bull market. You'll see this large red dashed line here. The key message that I'm giving, especially to your precious metal fans, is there is a key level of support that is about to surrender in the next fortnight, in my view. Forget the fact that silver got slammed on the open today and all of that. This is churn and chop for the moment. That's that green candle that's rallying there. We have said for an extended period, this broadening pattern that you see here that I've just made there, like that triangle on that bare pole, that's the slap in the face that I'm highlighting, resolves with a break in most instances of this lower line. So I can introduce another color just so that everyone's clear on that. That is going to break. You also have a support level across here. That's very key. So we are now leaning up against this. And I'll take you into that right shoulder now. I'll leave the 2 week and make it a little bit smaller time frame so that we can get a bit more detail there. Let's go to the 2 day, for example. We are leaning up against that level right now, and we have thrown it down. The momentum that we threw it down here, here, and absolutely here, you are grinding along this range. The break of this level, which will say goodbye to the 80 relationship of gold silver, will have a disorderly decline. That means super fast. Generally, more so than you've seen here. A lot of chop, a lot of up, a lot of down to the 65 zone. And that'll be associated with not gold going up, but silver also within that going up relatively to an increasing gold. That will bring it to the 65 neckline. And when that eventually breaks, you will probably have a pause and a bit of churn period at the 65 level. You will then be let go all the way down to the 30s. So just to put that in context, what does that mean in gold silver price terms? We have a target of 2,900 on gold, and that's where it will probably rest again. 2,900, and I will show you how we got that. So technically, give you a little bit of the technical analysis. That comes from a macro bull flag target that we have that will take us to the threshold of 3,000. Incidentally, just as a small point, and I give this for all precious metals people, when we overcame 1,000, we also had 3 touches, and then we smashed it on the 4th, and then we never looked back below 1,000. So in the lows of the 2009 era, we were sitting in a period where we tapped up against the $1,000 mark a number of times. This was as QE was being unleashed. You can see it here. That is your 1,000 mark. You put a finger over the 1,000, you touched it one more time, you touched it there, you touched it there, and then the 4th time you smashed it and you went right the way up to 1927, which brings you to the threshold of the 2,000 mark. Now you are here at the 2000 once. That was the run-up, the bull market, with the next level of QE, which went from hundreds of billions to trillions, 6 or 7 trillions, right the way up to you made your 3rd knock, and we feel you're about to go upside. I've got a lot of lines on there, so I'll just take them off for a second. And this flag that you can see here, that line there is projecting an up move to the 3,000 mark. So let me just take that off. There you go. And zoom it in a little bit for you, because we've got a lot of history in there. That'll run you up to just about the 3,000 mark. So if you think 3,000, and when we make the head and shoulder target, I'm giving you a lot of detail here, maybe it's too much, but for that gold silver ratio, if you make that 30 down to the 33s level, that the target is implied on that head and shoulders, you're going to have essentially 3,000 gold. And if you pause, normally when you make a target, you pause. So you would come down hard down here. You might churn a little bit at 65, and then you go again for a big sell-off and make the 33s target. You're talking about a much better ratio. It's still not 8, but it's 33. So what that would mean, if gold is 3,000, you would divide by 100 and multiply by 3. It's quite simple. So you'd have 30 times 3, you'd have $90 silver by the time that target is made. So if they coincide, that's pretty interesting maths. And then we feel actually you'll go sub double digits. You'll go to a single digit in the gold silver ratio at a point. But I think we'll be in a very different environment in terms of debt, and a very different environment in terms of the buying power of a dollar. But that will lead eventually to triple and even potentially 4 digits. You could have 10,000 gold, and you could be at about 9.99, let's say, on the gold silver ratio, and you'll be at $1,000 silver. So we think silver has been constrained for a very long time, and that when it gets unleashed, it's going to be crypto-esque in terms of its response. So let me leave that and let you come back at me.
Yeah, so I think this would be a good time to maybe take a step back and have you explain to us your trading methodology. What is the time frame you generally go with? How does it work? And obviously, you've just gone through a lot of technical analysis. So maybe for those new to TA, how can they get started, and maybe a little bit of color on why technical analysis is so important? I know that's a lot in one question, but very interested to hear your thoughts.
No, it's a good question. Yeah, it's a very good question. I'll give you an example of a particular setup that we are in. And in fact, we see statist tokens playing a substantial role in this forthcoming freedom-denying, totalitarian central bank digital currency concept that they will be unrolling to us. And as a result, it's not something that brings us great glee. But the point of the matter is, it is what it is. And with the opportunity to make wealth out of this, we won't necessarily participate in their schemes, but we want to participate in things that will be wealth building. And you can see these are classic examples of what we call volatility constrictions. I chose a crypto here just to vary it, but gold and silver do this all the time. Currencies do this, equities. We have an entire community where we are bringing together and analyzing just this one thing. So we say, be the brain surgeon rather than the paramedic. One of the early trader mistakes is, well, it's maybe not even a mistake. It might just be a path of development, is that you tried many different things, many different days. You'd come in and trade Bollinger Bands one day, and then this indicator crossing with that indicator. Then you do pivot points. Then you would do news. There's a news event, the payrolls numbers coming out, and have a guess on that. And that all quickly over time, you realize that there's nothing that long term. You'll have a few good days, but generally, my experience is you will lose money over that term, particularly if you're utilizing leverage. And the best thing to learn is actually money management, and then to determine when and be far more selective. So one of the key things for becoming a successful trader is cut your number of trades. First, measure how many trades you're making in a month. Cut them by 66%. So you go down to 1/3 of what you typically do. What that does is it forces you to get over compulsion, the always in. It's not work if you're not in the market. You need to get past that compulsion. Then you have to say, well, I need far more selective criteria then if I'm going to trade so little, because now I have to, I have to be more productive. So you start putting the onus on that. And also you should avoid going full time on trading immediately. You should have a day job, go work, go self-actualize in the world, because part of the emotional development of being a better person that adds value in life, in ordinary things, is part of the trader's development emotionally, generally. You can't be an immature trust fund brat, and then you need that emotional development anyway. And then what you do is our chosen methodology, because you asked about us, is the squeeze. So I've got a green line there. We look for 3 impulses with reducing volatility, and we call that an HVF squeeze. And what tends to happen is you get a violent move with a tighter stop, as you did here. And that was, this is a log scale chart, by the way, so I've actually compressed it down so it doesn't look too ridiculous, but that was actually a fraction of a cent. This was XRP. It was 0.6 of a cent at that orange line, and at that peak high, it was $4. Hold on, let me get that. I don't think that's correct. Let me just restate. What was it at the high? High was $3.31. So it wasn't even a cent, and it goes essentially to 331 cents. That's unbelievable movement, and you can have really strong moves as a result of that. And what we find now is that it's doing the same thing again. And this is called compression, volatility compression. Things go calm before they bust loose first. It's almost like the quiet before the storm, if you want a simple verbal analogy, but we are looking for a third move here and then a violent break that will see this run eventually to $16.7, $17. And it's something that you're buying for under $1 now at 72 cents. And I think it can go up and it can pull down. You might be able to get it. Now, we put our community in long at 40 cents, 46 cents over here. So I'm going to drop to a shorter time frame. In fact, right down to the 4-hour. And I'm going to show you that we use patterns within patterns. Apologies for that noise. That's my trade alerts bumping. We use patterns within patterns. And so we were very, very aware of the market squeezing here. And we had already had, you see this squeeze over here, and we were getting in long on the low volatility. And I'd actually even forgotten about the legal case. It was something that was just bleeding on and on and on. And there never seemed to be any particular resolution. And then out of the blue, we got this amazing break here. And that just took us, and we were lucky enough to have some leverage as well. We were investment long, and we spiked and we made targets on that move. So even inside this pattern, we've been able to trade the same technical structure, the compression of volatility. And the thing is, you suddenly get luckier. The minute I stood back and traded less and waited for specific criteria, I suddenly felt like a luckier trader. The minute I had targets where the market takes me out on the upside instead of stops, you should have stops, but I'm just saying most people only have stops, and then they just think, oh, it's a new trend, I'll just leave it on, and they end up round tripping and selling as it comes back, and losing their high water mark by ages. In fact, in crypto, I'm in all markets, by the way, not specifically crypto, but there's particularly in crypto, but also in penny stocks, people have round tripped all the way around. The GameStop, and the meme stocks are recent examples. Many Robinhood guys would have gone up, 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 and all the way back down, down. And that's because you don't have a point where you take off. So we have geometrically generated targets. So you don't know a risk reward ratio unless you know your entry point, at what point you accept you're wrong, and how much you stand to gain. And that nobody enters a business without knowing their margins, their purchase in price, if you're retailer, and your on sale price. And you've got to treat it like a business. So that's a small synopsis. Drill down wherever you choose.
Thank you for that breakdown. Very comprehensive. I do want to switch away from technical analysis now and talk about a Twitter Spaces you were recently a part of, where you talked about the Great Reset and how BlackRock and the Rothschilds will create incentives to coerce people into their system. Could you break that down for us and what you see occurring?
Yeah, so it's going to be carrot and stick, is my understanding. Initially, they start with carrot to get the early herd, the people that will always take free money, the people that tend to take welfare, the people that will loot stores given the chance if they're told they're not going to be arrested, and those kind. Unfortunately, it's a lower end, but they are a large part of the population. I mean, it's happening on WorldCoin right now. Sam Altman has created a token that's clearly going to turn into. So they want to essentially, for this grid that they're bringing down on you, and it is a slave management grid, they want everybody first to be 100% identifiable biometrically, so that they can say you made that transaction, that is a taxable event, real-time taxation can be applied, all forms of extraction can be applied. You can be blamed for your carbon footprint, your social score. You said something horrible on Twitter. So eventually Twitter, all these social medias, everything, you'll be biometrically tagged and pinned for being that. So, you say something unfriendly to, Joe Biden or something like that, you could get black points for being, a subversive of some form. And the way they do that is they want to clearly identify you. So they offer you this conjured up coin where you'll get some tokens which will have some value, and they'll first do a coin go up where they control it and bid it up. They might only have released some of it, and they'll throw a whole bunch of money at it, and they'll be part of the bid that consistently buys it up. So everybody goes, free money, and it's going up, and I'm going to get rich. So, greed factor will drive everybody into WorldCoin, and they'll be lining up to have the orb scan their iris. And you'll start to have lots of people, and they say, because you've done this, it's going to be much quicker and safer and easier for you to buy at the stores where there's shoplifters for 2,000. They'll lock up the stores because, there's people that's doing shoplifting, and you'll have to have an iris scan to go in. So they allow the crime. That creates the need to prevent the crime. That will probably have stores look more like banks with greater security, only they won't have employees there. You'll have to one by one come in, and you'll get iris scanned. And so suddenly access to facilities in the name of protecting you from stealing criminals, etc., now becomes, sorry, it's got to be biometric. We need your iris scan. We need to know it's John Jackson that's just come in, and he's been allowed in the store. Anything that happens, that'll be charged to your wallet. If you stole anything, we have, barcodes on all the products. So, literally you can go in, pack your bag, and they can charge you remotely out of your wallet, or they can stop you from leaving if you've taken too many items and you have insufficient funds or tokens. So my opinion is that will enforce people that use traditional supply chains, eventually health services, all of these things. They'll say, well, we get all your medical records. We first need to know it's you so that we can have access to that private data. So it's all going to be, you're going to be bullied into, in essence, moving into the blockchain with who you are, what you are, all your information. Essentially, any form of privacy will be, they'll say only certain government departments will have access to only certain aspects of your profile, and you'll have to have an approval. But at the very top, they will have everything about you transnationally. That's the big thing that Think loves, is saying, well, no longer are you bound by nation boundaries. It's transnational. Well, what transnational does is it leads you into world governance. They'll then say, well, we need rules that extend for all nation states, because technically anyone can own Bitcoin and send Bitcoin to somebody else. That leads to a globalized tax system. And then eventually, as I say, real-time taxation and extraction, etc. I mean, we're already seeing examples on the smart grid where people have been automatically being switched to higher costs ratings on the energy. in the smart grid because they consider the usage at that particular time of day is inconvenient, and it's automatically done. So they are extracting you out of services, and the end-term goal is a stated goal. You will own nothing and you will be happy. Happy probably comes from the happy pills they'll be stuffing you with, and you'll end up being rentier of everything, because the subscription model is the way of the stock market. You used to buy Microsoft Word, you used to buy Microsoft Excel. Everything is now cloud and rent. Well, cloud just means a big server in either Microsoft or Amazon's server farm. And in essence, you don't own those products anymore. You now pay for them to utilize them annually. So the whole concept of turning into subscription models, everything is the game. So there's car manufacturers that will have wallets that will supply fully fitted cars, and you'll only buy the base car level, and then you'll rentier the aircon, you'll rentier the radio. That way they only have to make one version, they make it fully spec'd. You either buy it outright at the full price. If you can't afford it, you buy the lower model, and those other bits are left in the rent. And if you utilize them, you have to have an associated wallet. These are the mechanisms that they will extract subscription revenue out of people. The long goal, they've already discussed this at Chicago Professor with Vitalik Buterin, has already discussed that property and ownership is a bit of an old fad. You only need what you need for your life. So this is the whole thing, is that I hate that assets get passed to next generations, hence the beginning of death taxes. Well, the best way now is you don't ever own anything, and they own it. In other words, it's a perpetual income guarantee and power for them, because they also get to choose who rents and when. And they want to put NFT tokens on property. They're going to start with registration and conveyancing, having people register their properties. And they'll make it a lot simpler to buy and sell properties. You'll buy the associated NFT for a property. And his great idea, this Chicago professor, is that you have to self-declare the own value of the property for your taxation. So they're going to start squeezing property owners on taxation. And if you ever deem to undershoot the valuation of your property, there is a forced sale. It's already pre-sale agreed. Every property is sale ready. Even though it's in your name, it's sale ready for somebody else. And if you understate that, they can just do a forced sale. Now, if you're the people that issue the tokens, that is the new CBDC, you can literally type up a couple of million tokens for your self-proliferation and slowly make it policy that you accumulate everybody's homes, even if they give fair value. I mean, you have unlimited money in essence. And slowly you just say, look, we bought your home, but don't worry, you're welcome to be a tenant. This is the tenancy agreement. We've taken over that token. We think that you saying your home is worth $2.5 million is incorrect. We think it's worth $3 million, and we'll happily take the purchase at that level. And that can be a parastatal or a semi-quasi-private company, like something like Blackrock or Vanguard, for example, that's not government, so quasi-private, but happens to have this unbelievable proxy of being able to buy, as JP Morgan did, all the assets of the banks that were squeezed into closure earlier this year, and be lent money for doing so at an incredibly beneficial rate, and buy substantially over market, and be the only bidder for the only thing that was of high value, and just expand their customer base and their profitability on an incredibly low PE. I mean, you don't get access to deals like that. This is a fascism. This is a corporate oligarchy where the controllers of the banks are actually the people that choose the long-term government. So it's pretty totalitarian and it's pretty grim. And I fear that we're going to have to participate to a certain degree to it. But I would also say you want to make sure you maintain dark assets, what I would call dark assets. It will be very innocently put to you, do you own any precious metals? And it's just for records purposes. It's nothing else. They've got to send the man with the clipboard first. They want to information collect. And at that point in time, I'm going to suggest you to think very hard and to have multiple locations, and potentially to keep it within your own interest, that disclosing everything to government is the first step before taxation, capital gains, when these things are deemed to have moved, that turns you into a forced seller on them, that turns them into, you've got to put an NFT next to them, and then makes them a buyer of your metals because they understated it, and they can do forced purchases all on the blockchain while you're sleeping, and just notify you in retrospect. Unfortunately, this is all about power. It's not about money anymore. The money is already well beyond any form of normal man's comprehension that they have. This is utter control. They not only do they want to win, they want to win and see you lose. They need you to own nothing. They want every single ounce of gold and silver and property to be controlled by their proxies. And the derivatives, the forms of derivatives and the rug pulls are actually historic. The mercantilist caravans used to say, come to the temple, and the temples were the great buildings and would have safe havens, and leave your gold here, and they used to give out clay tablets. And then the mercantilist traveler people would disappear with your gold, and you'd be left with a clay tablet. So the breach of trust and the establishment of proxies or derivatives. This clay tablet is your representative that we hold X ounces of your gold. This is the same old tricks, just with a technological twist and a new generation of fools. And you've got to realize, if you understand your history, these traveling mercantilist banker types are the strippers of wealth, and they are parasitic by nature, and they are hungry for power, and they want every ounce of blood in your body. And that's my take.
Very interesting. And it's funny because a lot of people in the general public find it hard believing this. Why would these people do this? I have a theory that, the political class attracts a lot of psychopaths, and I mean actual clinical psychopaths. I don't mean people who are just crazy. And if you look into what psychopathy is, these people have an incredible lust for control. And I think there's a possibility that the small percentage at the top who is creating all of this, disarray in society and trying to attain these goals you've laid out are actual clinical psychopaths. And I think that could very much be a reason behind all of this. So with all of that said, however, you mentioned holding precious metals, obviously not disclosing them. What other ways can people protect their wealth and their freedom from this system?
It's very hard to fight against a machine this big. This is Terminator, the movie we're talking about. You need self-reliance. You need to be quasi-rural, semi-rural to full rural. You don't want to be deep suburban or definitely not high-rise urban. And you need to produce as much as possible of your own, and you need neighbors that are producing the rest that you can swap and trade. In other words, you have to go back to grassroots and community. You need to know your butcher, your baker, and your candlestick maker, your neighbors, the local policeman, you need to flip in your police to be local community orientated rather than deep proxy of state, so that they warn you when things are coming in, and they don't just follow orders of an immoral. And don't forget, they will write the laws that will establish everything they do as being essentially legal. You're going to see a massive divergence between legality and morality. And these people can write laws. You've already seen it, compulsory. I've actually got a narrative of somebody in Norway that was awakened by a community member of mine who was actually put in a mental asylum for his Facebook posts around his questioning of the events of March 2020 and the cure jibby jabby. So, that is legal. That was entirely legal. Is it moral? It's absolutely draconian and totalitarian to take someone like that away for incessantly posting about the ill effects that are likely. But that doesn't mean it's not happening. So you need to get away from government. You need to be as far rural and self-reliant, and where enforcement is big areas with low concentration of police. And you must be obviously able to protect yourself from lynch mobs and people who haven't taken the time or the care to prepare properly for this. And I think rural areas are generally better, although there is a war against farmers and there is an agenda to drive everybody into pod mega cities. So that's when you start asking questions about what weaponry was used potentially in the California fires or anything else, because I do think they're going to try clear the rural, the big open areas between the urban societies. So, you're going to face challenges in everything you do, but that doesn't mean we shouldn't take them, and we must play this hand It's the hand we've been given, and we've got to play it all the way out by taking action, by preparing, getting organized. Real mental force comes to you. Don't be paralyzed, deer in the headlights. It is, you were born in these times because you were meant to have this experience and that you are capable. So brace yourself, be a leader, take action, advise, give good counsel, and get prepared and organized. And those are my points of counsel to people. You are facing a monster. There is a war, but it's not a war. They'll talk to you about Russia, Ukraine, and maybe China and America to come, and all of these things. This is how they manage citizen populations, particularly of the male population. I mean, this Ukrainian war right now is devastating the young male Ukrainian population. It's also led to massive markets, black market in organs. God forbid you get picked up by the ambulances as wounded as a Ukrainian soldier there. You won't make it out that ambulance, although your body parts might. There's an entire dark trade going on in everything at the moment. Children, everything as part of these proxies. This is the beast is emerging from the ocean. You know, that thing, that monster you spoke of that was below the water level, broke cover in March 2020. That if you haven't noticed and you haven't seen, that there was an absolute orchestrated general, and I'm shocked by this Yuval Ravani guy saying, how can people say there's cartels or the world's too complex for it to organize? Well, how the hell did we have a one voice world system approach to one solution that seemed to benefit a handful of pharma companies immensely to an absolute extreme? How was all of this called? How was all of this predicted? How's this been leaked before that this was going to happen? How did all these things happen, and how did they turn out so badly for the people that complied on such a scale, with more still to occur in that space? Some people say within 5 years, people that have had multiple doses will not exist anymore as a result of turbo cancers. You have to look at the fact that there's a beast in the room. Being a sniper means you're sitting in the dark and you look to the light where the silhouette is, where your target is coming. You have to find comfort in the dark around you. You have to sit and wallow in it and accept it. It is what it is. But we look to the light and we protect ourselves and the people around us. And positivity of everything is actually a mental disease as well. You have to accept that for every day there is a night, for every long summer in the North Pole there's a long winter, and that is seeing the fullness of everything. And when you're ready to see the fullness of everything, you're ready to deal with dark topics, you will also be able to be ready to deliver solutions. Too many people that think that one politician or voting yourself freedom is still going to happen. You just have to get Donald Trump in or somebody else in. These are people clutching at straws that are swayed by hope and thinking that there's someone out there batting for them. You are the master of your ship. You are the captain of your ship. You are the master of your own destiny. You must take control and get like-minded around you. And that is the reset speech that people need to hear. No one is batting for you. Work on the basis that no one is batting for you. Set a low bar in political circles. Trust me, you don't get elected, you get selected. And go from there and form localized support, and you will be an oasis of life, real quality of existence in a dystopian environment where people will be chipped and in high density urban areas in a 6-7G track and trace surveillance finance world.
Very well said, and I think that's a great note to end things on. But before I let you go, for those who want to learn more about your work and what you do, maybe you could tell us about the Market Sniper, where they can find that, and anywhere else you want to direct people online.
Yeah, I speak out of three hats. You were listening to the reset hat in that last statement, and we acknowledge the end of a fiscal era and that there will be a sizable reset and this totalitarianism is coming. The crypto sniper looks very specifically at the new world order money system that is brought. We don't evangelize about it. It's brought to be the replacement system to the collapsing financial system. And there's plenty wealth we have built already through that and will build more and utilize that to secure ourselves a degree of freedom. And then the market sniper is that around the traditional markets, oil. We never got to look at uranium, but we do. So if anyone likes that, I think you've got followers. in there, we cover that and the methodology of how we trade, which I was showing you there on the XRP. We've done it on all the other things. We will be wrong, but normally then we're out very quickly. All of that can be found on our YouTube, the Market Sniper and the Crypto Sniper. We have two separate channels for those, and it's also the Twitter avatar. So at the Market Sniper, at the Crypto Sniper. I cover reset topics on Odyssey because I got strikes for the kind of things I say. And that is slight paid. You have to buy me a coffee if you want, but if you're in our community, that's all for free. As we study and understand the system and the beast fully, so that we can customize our solutions to the highest standard. It's not just about wealth creation during this turbulent time. Your traditional IFAs are going to give you the wrong advice. They're going to give you the 40-year advice of the Volcker era to where we are today. You need the turning of the guard and system advice, and you need the protection. We're non-advisory, but you need to prepare differently this time, and you need to protect wealth as well as build wealth, and we focus on that, and we use the tools of that control structure. So you can go to themarketsniper.com and book a call if you feel, but check us out first on YouTube and decide if you like what you hear. Thanks very much for having me on.
Yeah, great. I'll put links to all that in the description below for anybody who wants to check that out. There's a lot we didn't get to today, so we'd definitely love to have you on in the future again to continue the conversation.
I would love that. Thank you.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.